Everyone, RC Peck here with Fearless Wealth. I want to talk about China versus the US. I want to talk about inflation versus the stock market. I want to talk about Ethereum versus Bitcoin. I want to talk about the international market versus the US market. And finally, I want to talk about the Nasdaq versus the S&P. So this is the versus video, all timely. Stick around. We're going to get to all those and more. All right. Hey everyone, RC Peck here. So let's get into this. There's 5 things I want to cover and I'll really get through them. I want to get some meaty information to you. I'm going to start with China and the US, and then we're going to get to inflation, then we're going to get to Ethereum and Bitcoin, talk about international, and talk about the Nasdaq and the S&P. So whether you're in them or not in them, this video helps you hopefully to think even clearer and stronger and have even more control over your money a week at a time. Okay, here we go. Let me jump over to the price charts. So this is the Chinese stock market. It is the Shanghai Stock Exchange Composite. No currency exchange, no issues with currency. This is just what it is right here. At this time frame, this is a 3.5-year range. It doesn't really look like they're cracking down as much as they are on what seems like everything. It's when you start to compare it with other things, let's just call an other thing the S&P 500. So this is an index of the S&P 500. So this is index to index, no currency exchange or anything right here. So basically what you're looking at here is the Chinese stock market priced in US stock market units, right? It's just priced in a different currency. And then it gives you a much better idea of what's really going on. If we zoom out just a little bit, okay, let's zoom out 9 years. You can start to see, basically China's not really doing well when you compare it to the US stock market. Absolutely, there was a huge spike in mid-2014 to mid-2015. That was the big oh my gosh, the world's going to go open up to China. China's going to get a huge part in MS World, which is the index that tracks all world ex-US. But as your brain sees this, and as we zoom out, this is 15.5 years of price. China just hasn't really been able to figure it out since the global financial crisis in 07, 08. And if you look at the screen, you can start to see it even broke down below a major support in 2014, and it's continuing to trend down. So I think this is by plan. I don't think this is a place where you say, oh, I'm going to find a bottom right now. I mean, look, there probably will be a bottom one day, but look, if China came out one day and said, we are delisting all of our stocks from all the other exchanges across the planet, I would not be surprised. If Alibaba gets delisted from the US and all these other Chinese-based companies get delisted, would not be a surprise, because maybe the Chinese government, the Chinese Communist Party, says we want them only listed here and only here. So this is a price chart at FFXI. It's an ETF that tracks, it's called the Ishares China Large Cap Etf. And it just basically looks lost. It definitely broke out. If you look at the screen, it did break out, sat on that breakout and moved higher, and then got sold into, that was absolutely a false breakout, though it looked great at the beginning of the year. And just from its peak, again, part of this is currency change. It's down 28% from its top to where it is right now. So I think China is a skip for now. I would not start fishing or dipping your toe in or any other metaphor. This is Alibaba right here. Clearly, people think that might get delisted too. So the theme is stay away. And over a long-term period, I still will bet on the US over China. I think free market, it's messy over the short run. But I don't think a couple dudes at the top, Chinese Communist Party, doing what's best. Even though they say no more videos for kids or no more than 3 hours of video time for kids, which, look, part of me likes that, but I don't want the government raising my kids. I'll raise my own kids. Okay, so that's number 1, China versus US. I'm going to say US over China and stay away from China for now. Okay, the next thing, CPI. So CPI came in this week, 40-year high of inflation, 6.8%. So when someone talks to me about inflation, one of the things that I will just do is I will just go look at a price chart of the stock market. And I'll say, well, hey, stock market. Now, this is the S&P 500. This is the most important index on the planet. Why do I say that? Because I believe the Fed chairman, or the Fed, they look at this price chart. They don't look at the Dow. They don't look at the all world. They don't look at the European stock market. They don't look at the yield spreads between the 10 and the 2. They don't look at small cap indexes. They look at the S&P 500 and they say to themselves, did it go up or down when it was my turn at the Fed, being the Fed chair? So the S&P, even if you don't live in the US, is the most important index on the planet when it comes to stocks. And so, look, the S&P knows about the inflation highest in 40 years, and it looks fine. It's actually at a new lifetime high. So we have to go with price. We have to pray to price. We have to understand price. We have to understand ourselves. But price is what helps us. So that is number 2. I want to talk about inflation versus the stock market. Okay, I want to talk about international now. So this is a super zoomed out chart. I'm going to look at MS World here. So MS World is all world ex-US. So it's basically the whole the whole planet without the US. So I'm taking the US out of it specifically. Now, they are near new lifetime highs, right? So back in 07, 08, MS World was breaking out continuously to new highs. Here we are 12 years later, and if you look over to the right of this, it is just, it's consolidating. Now, I would like it to have consolidated above new lifetime highs, but it's not. So let's do something interesting here. This is a daily chart, meaning each little squiggle is the day. I want to go and just have it be the close of the week. So the reason I'm doing this is I'm still looking at the 07 high, and we're now looking at still the same price chart going back to 1995. I just took the high of the closing price of the week. The first chart I showed you was the closing price of the day. This is the closing price of the week. And so where MS World is now looks slightly better. Now I'm going to do the closing price of the month, wherever the price closed for the month for MS World. MS World is an index, and you can see it's looking slightly better. Basically what I'm doing is, as I delete information, is the story getting better or worse? It's still the same time frame. And now let me look at quarterly. So this is the closing price at the end of each quarter, going back to 1994 is when, at least the data I have here. And now we start to get something slightly different. So when we look at a closing quarterly, now we see MS World, or all world ex-US, we see it breaking out to new lifetime highs. Now, I'm not trying to do trickery or I'm not selling you on the idea of all world ex-US. I'm simply showing you a closing price on a daily, a weekly, a monthly, and a quarterly. And as we delete more information, the story gets stronger. So the stock market, the world stock market, is in really good hands. This is a good one to follow up with inflation, because even with the news coming out about inflation and you are getting hit with the attention economy, people are stealing your attention, we can look at MS World and say, it's looking pretty good. Now, I could just show you a tracking symbol. Now, this is VT. This is all world. This is all world. So this is the whole globe. Now, it is priced in US dollars, so that's going to skew it a little bit, but we're also looking at quarterly here. This ETF only goes back to 2008. But you can see all worlds. So this is planet Earth is like, yeah, I'm fine. I'm fine with what's going on. Okay, so that was the third thing I want to talk about, which was what is international telling us? And it's telling us things are fine, but we're in short-term volatility, but long-term up into the right stability. Okay, number 4, I want to talk about Ethereum and Bitcoin. So let me just show you Ethereum here, ETH, So here's Ethereum right here. Let's see what kind of data we have here. So giving you 6.5 years of data here. What I wanted to show is generally the direction. So just generally speaking, not specifically generally, since Ethereum has been trading, it is going and trending clearly in a direction. There are periods, obviously periods where it goes sideways to down. This is clearly a down. This is more of a sideways. This is a down within an uptrend. But generally speaking, what I want to show you is we're getting long-term clear direction, which is up and to the right. And we're getting kind of extreme shorter-term instability. So shorter-term instability, longer-term up and to the right. So that's one of the reasons why I like Ethereum. More importantly, I want to show you Ethereum and Bitcoin and talk about why I like one over the other. Let me just, this is not the price chart I wanted, but actually, since we're on this price chart, let's just stick with this right now. This is a 6-year price chart of how long Ethereum has been around. Now, on this price chart, it's Bitcoin and Ethereum. And so you can kind of see what has happened over the last 6 years with Bitcoin and Ethereum. What I wanted to show was ETH, and I wanted to show you a performance chart, but one that I can scroll on. So here is both of these two symbols, these two investments. The red one is Ethereum. The blue one is Bitcoin. Okay, so I'll just scroll here. That is, let's see, we're at December. Let's go. I'm going to go December. So here is about 2 years of data. I want you to think of Bitcoin as gold. It's the new gold. It's a way to store wealth outside of the system. You can cross borders with Bitcoin. It's very, very transferable. It's everything you wanted with gold, but even better. So Bitcoin is gold, and it's going to have a profile of gold, not as volatile. And Bitcoin right now, I'm rounding here, a little over $1 trillion. I could see Bitcoin being a $10 trillion market cap in 10 years. Gold's about a $10 trillion market cap. Ethereum is something very different, and something that people get confused about because they were confused to think this way is these are all called cryptocurrencies. You can't think that anymore. Bitcoin is a store of wealth. Okay, so it's closer to, when you learn about animals, you're like, oh, a raccoon's more like a bear and not a whatever, or this is more like a horse and not a crab. I should have had an example, but certain animals look like a panda. I think is more like a raccoon. you know what I'm thinking. So Ethereum is very little to do with Bitcoin. They're not even the same species. Think of Ethereum as like Android, the programming language, or the platform Android, or the platform iOS, right? Apple versus Google. So you could think of it as a platform. You could also think of it as a language, like HTTP, Hypertext Transfer Protocol. Think of it as a language or a platform. They're the same thing that people are building a whole new technology on top of. That's Ethereum. So Ethereum is going to have a much bigger upside. Now, will Ethereum be the only platform this Web 3.0 is being built on? No. Okay. But it's not going away. And the more people build on this platform and the more communities build entities and networks on top of Ethereum, the stronger it's going to get. So long-term Ethereum versus Bitcoin, absolutely Ethereum, if you're looking for a performance point of view. If you're just looking for some sort of store of wealth outside the system, then that would be Bitcoin. So I hope that understands or helps you out a little bit. And as you can see with the price chart here, at least over the last 2 years, Ethereum's been way, way more volatile, as in way more volatile. But think of it as a feature and not as a bug. Okay. And then lastly, I want to just quickly, I'll do it here. I wanted to talk about the Nasdaq versus the S&P. So let's do that right here. And I'm going to do it through the indexes. So I say the Nasdaq, it's actually the Nasdaq 100. Here's the Nasdaq 100 right here. This is an index. So it's not something you can buy tracking symbol of the Nasdaq 100, QQQ. But this is the index. It does not include any dividends. So this is what it is right here. And if there was an index that's kind of eating the world, like software is eating the world, like technology is eating the world, it'd probably be close to the Nasdaq 100. There's only 7 companies in here, or there's 7 companies in here that represent about 40% of the Nasdaq, those same 7 companies represent about 23% of the S&P 500. So those 7 companies, which you could probably think of what they are: Amazon, Apple, Tesla, Microsoft, Google, Facebook, Nvidia. I'm close to 7. Those are the ones that are eating the world. They're all technology companies. I know the S&P came out and said Facebook should go under communications and Amazon should go under discretionary, but really it's all technology. And so this is what we have here. We have the Nasdaq 100 eating the world. I'm going to divide this, or I'm going to price this, and I'll price it a couple different ways. So this is the Nasdaq. Now I'm pricing this now in S&P index units. So the first thing you saw was the Nasdaq priced in dollars. So now it's priced in the S&P index units. What to me is interesting is the old peak of the Nasdaq when priced in S&P happened in 2000. And there's a lot of consolidation going on right now over the last 18 months, a lot of volatility, which is typical. And so part of me was asking, why is there so much volatility going on right now? I think one of the reasons is the Nasdaq is kind of digesting its big move as it potentially is positioning itself to make another major move higher. So what you're looking at here is the Nasdaq 100 divided or priced in S&P 500 units. And so I want to point that out to you, that why is there this volatility going on right now above and beyond pandemic and inflation? From a pure price point of view, we have the Nasdaq consolidating while it's being priced in S&P 500 units. Okay, a lot today. I wanted to show you those 5 comparisons. Please leave a comment. It makes a difference. It helps me understand kind of what you're thinking, and tell me where you think I got it right, where I got it wrong. Did I completely miss it? Let me know what you're thinking, and I will reply to the comment. And then that also helps me think about what else I should talk about. And if you like this video, you will like our other videos, whether it's our weekly or my weekly updates or my Wednesday Ask RCs, which are more evergreen, what to do with your finances, things that don't change over time, whether you're a 30-year-old or a 60-year-old. Those Ask RCs are kind of timeless financial advice, guidance, suggestions. Okay, thanks everyone. I will see you on the next video. Okay, bye.